board. So Michelle, VP of Marketing of Synapse, previously with Uphold. Linqto is actually a client and partnered up with Uphold. Brad, obviously an educator, an educated educator, and a professional in his field, which are many. Please take it away. Michelle, start with yourself, introduce yourself. Brad, next, and then you guys can start this conversation. Thank you.
Thanks for having me. I'm happy to be here. So a little bit about me. I've been at Synapse now just over 2 months, really working on democratizing access to financial services, but on a large scale. So that's what, if you look at what banking as a service does as an industry, and then what Synapse is mission driven, it's in parallel with that. Prior to joining here, I ran marketing at Uphold for quite a few years. I see some familiar faces or Twitter handles in the audience. So hi guys, it's good to see you. When I was there, I really helped build and scale the community, engaged with everyone quite often on social, and looked at launching products that not only scaled in the US, but outside of the US as well. So there's a consistent narrative in where I work and what I do professionally to improve financial health and accessibility for consumers. And I'm really happy to be here.
And I'm Brad Kimes. I don't know how many people may or may not know me. I have a channel called Digital Perspectives. And Michelle, first of all, it's an honor to be here. I want to thank Linqto for having me here as well. I'm very excited for you and your new endeavor, moving with Synapse and coming from Uphold. And I'm really excited to have this conversation today. I'm a YouTuber, I'm an educator. I've been in the world of imports, I've invented products. I've been in investing for at least the last 10 or 15 years, and in crypto specifically in the last 4 or so. And I feel like, you know, digital assets and where this whole market is moving and new financial payments and things like this, I could sit and listen about this stuff and engage in conversation about this stuff forever. I mean, it is just, for me, it is absolutely just, it is just a passion. I absolutely love this space. So, Michelle, let's start. Can we? I think we're ready to start now. So let's start with your recent move from Uphold to Synapse. Tell us what Synapse is.
Sure. So Synapse is a banking as a service platform, but it's actually quite a bit more than that. And what that means, to make it really just distilled down version, if you look at what companies like Uphold and other FinTech companies are doing, they have to plug into the legacy financial services space. They want access to financial services products, but in order to do that on their own, as Kareem said with his son, it takes months, if not years, excessive financial investment, lots of legal fees. You have a team in parallel building the product. So there's a lot of outflow with very little to no inflow. What banking as a service platforms do and what Synapse does is taking someone with an idea or someone with a vision, and we enable that vision to come to life faster. And by doing that, it's essentially, we have an engine. If you look under the hood of a car and all the moving parts and things that are in place to have that car move, that's what Synapse powers. We power the access to ACH, which is the banking system, enable wires, enable card issuance, enable things like same-day loans, payday lending products. There's anything and everything essentially that lands within the financial services products is within our suite of services. And then we let companies plug into us and really just push that go live button as soon as their teams are ready.
It's pretty remarkable what you're describing that Synapse does to me specifically, Michelle, because, you know, it's not hard to sit in this space and have this conversation about what this all looks like 10, 20 years from now. That's a very, very easy conversation. Anybody could look like Nostradamus and sit down and paint a pretty broad picture and tell you how amazing all of this is going to look. But what you're actually doing at Synapse is providing that interface, that on-off ramp, for actually the on-ramp of all of the traditional legacy firms to get in this digital world, isn't it?
Absolutely. The on and the off,
Yeah.
across legacy finance, but we also support the emerging assets like crypto as well. There are other products that are coming online that I can't really share yet, but it really is, if you look at what the future of financial services will look like. Everyone knows that I have been involved in crypto for quite a while, and launching other products that really enable the future of finance in an improved fashion, in a democratized fashion, where it's not dependent on a few large player banks. It's companies that are answering to different customer needs or different product offerings. Synapse enables all of that. So that's really where, if you look at solving the problems of accessing legacy finance, which can be time consuming and financially consuming and frustrating and challenging, because if a founder is unsure how to answer a question, or they don't realize that they need a compliance team, or all of these things that are kind of learnings that you don't know until you know, that can take a long time and be frustrating, but also prohibit companies from launching, from raising funding, from hitting the numbers that they plan to. So it's really a way for Synapse to take a step back and say, we could launch all of these things ourselves and be a consumer play, or we can enable hundreds and thousands of companies to take their vision forward. So that's really, when our founder created the product and the company, that was his vision, is democratizing access for the many. And that's why we are here as the engine to enable that.
Well, it's pretty remarkable that you touched on those topics, because you're talking about it's not just about a handful of big banks and the democratization. And I think of another word that comes to mind is decentralization. And I think when I think of those things, I start to think back at things like the Ubers as an example, or the Airbnbs, and the decentralization of your hotels, and you're now bringing it home, and now it's direct from the person, the customer, to the owner, and you can rent their house, or you could get that ride from that person, right? And even into the PayPal world, right? Even if that was in '98 and they made it through the Great Recession, it's still a company like Venmo and Square and these companies that came out of the recession era that really speak to decentralization of finance and payments. And this is just, to me, when I look at this space, that next natural organic step to getting this next wave of industry and players, because this isn't just about banks, as you pointed out. This is about anybody that needs these things. And when you start to approach this from a business aspect of, hey, you know, I think it'd be a good idea for us to make this change now, you know, that's easier said than done, because you're pointing out of all the things that you have to do. You know, stepping over this conversation a little bit into the regulatory side, because you touched into it, is that it's not as simple as just, well, I've got the API interface and here we go, right? You know, if it was that simple, this would have been done a long time ago.
Yeah.
But, you know, and I must say, I am the eternal optimist, and notwithstanding the current political climate here in the United States, you know, I have to admit that over the last 160 days in the regulatory agencies, we've seen more strides here domestically at home than we've seen in the last 5 years in crypto. That's a positive sign, but yet it's still a long ways off from where we need to be. But I do take comfort in the fact that what we're discussing here is about decentralized digital assets that are global, and whatever lagging or strides that need to be made domestically here in the States, I think the fact that these are digital assets that are global assets that can be used all over the world, that use case is going to become an inflection point for this entire crypto asset space, as well as banks and neobanks alike. So let's talk about neobanks, Michelle, really quickly. So can you explain to people what the difference between a bank and a neobank is for everybody?
Sure. If you look at a traditional bank, they were brick and mortar first. They inherently, now because of COVID, that's frankly shifting the landscape, but they really look at traditional offerings. The offerings that across most banks are very similar. If you go to one, you're going to get the same story as you go to the other. And they really aren't meeting the consumer where they stand at the same level. What neobanks are coming in and are doing are leveraging banking as a service platforms, and they're saying, okay, we're going to be digital only, digital first. We are going to look at what the consumer space wants and what their offerings are. So if you look at the neobank leaders like Revolut, Starling, and some of the other ones, they really set the precedent of customer-centric, customer-first, which is non-existent in banking, legacy banking at least. Their offerings are agile, their offerings are real-time and shifting and changing. Their company and tone are usually very engaged in community, very engaged in social. Their leaders are present across conversations. And it really is taking a precedent of meeting their customers where they stand versus being kind of a perceived banking row, you know, you walk in, kind of the old stifled, stuck up world that was in legacy banking to date.
No, well said. You know, here's a funny thing. You know, I think I'm probably one of the biggest geeks on earth because, you know, when it comes to stuff like that, I mean, you know, I love this stuff. I've been a professional musician for 30 years. And while everybody was doing the parties and hanging out, I was just reading drum notation. You know, it's like, you know, I'm all about the facts and getting into the things that are really, you know, what moved the space forward. And it's interesting because when I look at this idea of neobanks and I think digital first, one of the first things that come to my mind as an investor here is I'm seeing the template of Amazon basically superimposed on the financing world is what I'm seeing. And it's quite profound when you take that model of no brick and mortar and we move to a digital format and customer centric first, because you're going to absolutely be about the customer service, because what is your other connection here, right? So you must win on that front. And if you do, that's like an Amazon template in the, and I just see, I see a huge potential for growth there to just be like 10, 20, 30, 100-fold, like, you know, just multiplying at a rate that we probably have never seen because this is about finance and money.
Mm-hmm. Absolutely.
So, all right. So so again, it's easy to look 10, 20 years ahead, right, and see how this world goes. So let's bring it back to ground level here. What kind of hurdles is Synapse facing right now, or challenges are you facing right now?
I think it's not as much a challenge, but it's an inflection point. When COVID hit, the uptick in demand for access to digital assets, or for companies to come and say, hey, we're going to launch this digital first, digital only type product, but we need to plug into legacy finance, or we're going to disrupt real estate, or we're going to disrupt payday lending. The need for instant or near-term lends to bridge people when they're, you know, living not only paycheck to paycheck, but day to day, as we had and continue to have financial downturn. A lot of companies came into this space wanting to take those visions to life that solve those problems. It's wonderful that there are visionaries out there doing that. I would say that the challenge that we face is being able to get all of them up as fast as they want. And that's less on the Synapse side, but it's more, if you have a founder with a vision, their understanding of going from vision to wireframe to, you know, MVP to live, we're there and they can press go as soon as they want. But there's kind of some of those things that it's been interesting to see those challenges. We have companies that launch this as early as you know, weeks, not months, because they're able to really get everything in line and going. They're able to close funding faster because of it. So I think it's the only challenge that I see, but that's kind of part of the reason I'm here, and what I'm improving upon is helping inform our potential customers what they need and how they can get that, and really empower them to be ready to scale and what it looks like, and help them also understand the importance of community and their end user. Because as much as we're powering the platforms and users are important as well. So I'm really making sure that we keep the end user, which is the consumer, in mind in anything that we do.
Oh, that's wonderful. So, you know, when I think about what you guys are doing at Synapse, obviously, you know, there's an efficiency there if you're moving into the NeoBank, the digital platform. There's a scalability that's brought into the equation that you don't have access to otherwise.
Mm-hmm.
On the other side of that equation, and I'm asking this because I don't know, but is Synapse also in the business of not only helping you get your business into the financial system, but are they also in the business of helping the company or business offer, like, let's say if I'm a bank and I want to have that digital platform, I can come to you, right? And if I do, will I be able to take an easier path to help bring crypto to my customer base, as well as the products and services that I offer?
Absolutely. So there are a few customers that I can't name for obvious reasons, but they would be viewed as traditional banks that realized that they needed to step it up basically and get into the digital area. And instead of doing that internally, they are leveraging us because we were able to literally turnkey, push buttons and go, made it a lot easier for them. The crypto side, which is an interesting touch point, something that I'm very passionate about and still active in this space, and and have holdings across different currencies. We enable companies to turn on and leverage crypto wallets. So that's something where if you look at it's kind of two different folds. So someone like a legacy bank or any sort of startup could come in and say, hey, I want to accept Bitcoin or ETH or whatever it is, we enable that. So it's a step where we support the traditional rails, but also the new and emerging rails. And then to parallel, if you look at a crypto company, a lot of crypto companies have challenges getting banking, challenges getting ACH. Most of you leverage different wallets, and that's still kind of a hurdle. And most of them now have some ACH, but it's usually slow, or you have to send in a wire, or it takes quite a bit of time. So we enable quite a few prominent crypto companies to have those traditional finance rails where they're able to plug into the ACH and banking system because they are partners with Synapse. To take it a step further, some of them that are looking at issuing debit or credit cards leverage our product or will be leveraging our product. So it's really taking what you're looking and kind of the sky's the limit with a vision and potential.
Yeah, it really sounds extremely exciting. And are you able to say like how many clients you guys currently have, even if you can't say their names? How fast are you acquiring clients at this point, and how long have you been open?
So I can't give a number, but I can say since I started mid-September, I am on at least 3 to 4 calls a day with new or upcoming partners that are, either in final stages or have recently signed. And those are different platforms. So it's a very busy onboarding for me, but it's been exciting. And then in parallel, conversations with partner banks that are the back-end connection to legacy finance. So it's really, if you look at trajectory and scale, it's what everyone wants, the direction it's going, and it's fast, but it's very exciting.
Oh, I bet. Yeah, it sounds like the adoption rate is really taken off over there
Mm-hmm.
for you guys, no doubt about it. So you spoke about an inflection point, and it does feel like we're at an inflection point, and it's not just with cryptocurrencies, but this digital changeover. And I think obviously whether companies have been pursuing it before the pandemic or not. I believe the pandemic has become a huge catalyst, much bigger than even Libra, right? I mean, we all remember how much Libra, really kicked off the conversation. But I think the pandemic has obviously squashed that whole idea. And, everyone is moving towards this, and they know that because, the way of the world now is if I can do it over the phone or over the computer, I'd prefer to. And that's not going to go away as we do eventually at some point move out of this moment of time that we're going through. We're not, as the IMF or the World Economic Forum says, we're going to a great reset, right? We're going not to build back the old, but to build back the new. And I think Synapse is very indicative of that. So let's talk about the things that need to come new with all of these new startups and private companies, which is regulations, right? Now, primarily our conversation is going to be domestically about the states here, right? Because there's certainly a handful of areas around the world that got further clarity around the world here. And again, over the last 160 days or so, we've seen more motion forward than we've seen in the last 5 years for cryptocurrency specific. What is it that you feel needs to change for Synapse, not so much crypto, but for Synapse to really open the door full for you?
I would say less change, because we're in an interesting position where we do ride both rails, right? Where it's legacy finance, so we are heavily regulated in that way, and some things that are forthcoming, bringing that level a step further, which is why we recently expanded our compliance team and brought in a VP of compliance to really level up that side of the house. I would say overall, the most important thing, as much as it's burdensome and can be incredibly frustrating and seem to move at a snail's pace, when you look at regulation and oversight as a whole, although it traditionally, I remember early on in crypto days, any sort of regulation or oversight was kind of frowned upon. But I think as the industry has evolved, but also the customers, and we can look back at some things that have happened and where we need to go forward, the need for clear oversight and positioning for digital assets is paramount for anything to really move forward in that space, and really for legacy banks to feel more comfortable with digital currencies being equal playing in the space or having equal partnerships. So there's been great strides in tax regulations. Hopefully we don't get a shift in that, between this year and next year. I think there have been great strides. Caitlin Long is amazing in what she's doing for the space. And I look at her as a leader, but also she's incredibly inspiring to see what she's able to accomplish and has accomplished really recently. And looking forward, as long as there's conversations, the more conversations that are happening, the more potential for inspiring thought and forward-looking regulation and ideas.
Yeah, and Caitlin Long, I must say, she really is a leader in this space. I mean, she has waited for no one, and it has been to the benefit for all of us for the strides they've made out in Wyoming, no doubt about it.
Absolutely.
Yeah, you can't overstate it. It really is. Now, I don't know if you're aware, are you aware of the definition proposal change from the Fed and FinCEN?
I haven't read it, but I read about it, that it was basically going to be one of the most advanced.
Yeah, I mean, so basically, they've made a proposal from the Federal Reserve and FinCEN to expand the definition of money to explicitly include virtual currencies. Now, I mean, if they do that, immediately, I think you take quite a bit of clutter out of this, this bit of a I guess, a cookie jar grab that's happening with, I think, at least 8 regulatory agencies here domestically in the States. Some of them can go sit down if we get that definition, I believe, really all encompassing, because if it truly is currency, well, then we've opened the door for them to not only not have a voice on it, and honestly, and no slight to the SEC, because they would not need to be a part of that at that point. And I think that they could probably breathe a sigh of relief. Obviously, they still have all the oversight that they normally would. But if we're talking about virtual currencies being money, they can strictly deal with whether something is a security token or not. And then the space is free to run. And that would be the best thing, I think, for all of us, no matter what coin you hold. But the other side of this is, if we do get that designation of it being money, then it comes down to what you talked about, which is taxes. And, you know, right now, banks offering these products to customers, that's great if this is an investment product, right? But, you know, then we move into the world of PayPal, right? PayPal's recently, and said they're going to with Venmo, because they own Venmo as well, open up these products to be able to buy crypto to their 300 million customers, which is fantastic for crypto. But there's an awareness missing, I think, for the people that are the 300 million holding that PayPal app. Because if they don't understand that if I buy, oh man, it's so fun. I could buy Bitcoin now, Michelle. I could buy it right on my phone on PayPal. Look, it went up $30. I'm going to buy a slunch, right? But if that happens over and over throughout the year and I make more than $600, at this current stage, I got to claim those capital gains, but I bought lunch all year long too. So, you know, there's something about this isn't settled and resolved yet in my eyes, because that dog don't hunt. Your thoughts?
I think it's interesting, and the taxation side of things are important to look at, and shouldn't be something, again, I regulation in crypto, but also taxation in crypto. I remember early days, people being really angry that taxation was part of it, but if you want it to be considered a currency, it's got to play in the currency game. So it kind of, right. You can't have both. When I look at taxation, anyone who follows me on Twitter knows that I've tweeted about a company that I was actually their first customer. So that was fun. Called TaxBit, and over the years, I've because I was playing in the space, but also using some different products that were on Uphold at the time, or had bought really early into things and then sold for whatever reason, or gifted some things. I bought my niece Litecoin when it was very cheap. And that was kind of how I invested in, you know, I called it her college fund. Now she plays Roblox, so she uses it for that, which I kind of don't understand, but it makes me feel old to admit that. So if you look at taxation as a whole and what it does, there's a way to look at it where it's not as intimidating, but it does require a level of understanding, because like you said, when crypto goes up and you sell or spend it, that's a qualifying event, right? But also when it goes down, which unfortunately we know it does, that's also a qualifying event. So I think that level of understanding, or having a partner that can understand that for you, which makes it a lot easier, because it's incredibly complex. And my CPA just kind of laughed at me when I sent him all my cost basis reports and said no, and sent it back. And thankfully TaxBit was in the market there and solved it for me. But there is a level of understanding that is in this space and coming for it. But it's important, because a lot of people get sidelined or surprised by tax letters because they didn't realize that they actually needed to file on these things, or had opportunity to claim a loss. So I agree with you 100%.
Yeah, and when I think about tax too, just to take this, you know, and pull it back just a little bigger on a macro international level, you know, because I mean, we're just talking about domestically here in the States, what goes
Mhm.
on, right? I mean, but this really gets to be a real mess when you pull this back and think of it on an international level. I'll just give a quick example. I had this talk with Greg Kidd the other day from Global ID, and I was mentioning to him, you know, it's just not as simple as me sending something to you or paying for lunch, and then it's this, that, and the other. That's one event, but let's just suppose country A is making these products, these wholesale products, and country B or company in country B is buying those and making a good out of them. And then they sell those goods to other countries that aren't even involved with the two countries that bought the wholesale products and made the final product to sell all over the world. How does that work? I mean, we're talking about digital payments and payment rails and smart contracts and all of these things. And I know that the OECD has come out with a two-pillar international tax system, which really, if you go through those PDFs and you look at it, it really starts to show what's, and they don't, obviously these consultation reports they come out with are, you know, more like recommendations and overviews, and they don't really just say it all the way, but you know, it really lends itself to moving to like some kind of international fair use where there's something split and each participating country would get a portion of whatever the tax on that transaction is. And you said this a second ago, but I know people are going crazy in crypto going, why are these people talking about crypto and new financial rails and taxes? But, you know, if we're going to have a legitimate market, there's no other way to deal with it than to deal with this, right?
Absolutely. Unfortunately, but that's when you want to play in the game, that's where you have to be.
It's where you got to be. I mean, I want a legitimate market. You know, I do. I mean, I do not want to look at my portfolio or my holdings in crypto and think to myself, or to be honest, or if I've invested in something like Synapse, right? And I've got an investment there, whether it be, you know, a private equity stake or what have you, I don't want to think to myself, this is the equivalent of investing in the dark web, right? I want to know that there is a legitimate framework here that I'm invested in, and I got consumer or investment protection and all of that going with it. And the market has that in the wind in their sails. Okay, so let's change gears a little bit because there's another element I do want to touch on. Karim, we got time, right?
We do have time, but I'm bursting with questions, and I want to have a couple for you before you go.
Okay, just one quick thing I want to throw in case somebody wants to have a question about this as well is, can we just talk about decentralized finance real quick, Michelle?
Absolutely.
Okay, so really quickly, does Synapse deal with decentralized finance in any way?
We do, in that we enable connectivity to crypto, but also to traditional rails. And some of our partners that are either crypto wallets that leverage for crypto connectivity and or ACH, we enable, we'll be launching really quickly or within the next, I believe, sprint, so in a few weeks, full connectivity. So previously had been just purchase versus on and off rails. Now it will be full on, off, and out for crypto.
Wonderful. And I wanted to just make, and I don't do predictions, but I'm going to make one. You know, in 2018, we saw the regulatory agencies, specifically speaking, the SEC, come in and squash ICOs, initial coin offerings. And they came through and put boots on the ground, and it wasn't long, and everybody knew that there was regulatory oversight when it came to security token initial coin offerings. And I would dare to say that the next hurdle we're going to see in the crypto space is going to involve decentralized finance. I think it is going to be an enormous part of the market. I think it is going to be probably a larger part of the market than crypto assets themselves eventually. And I think because of that, we're going to have to see another moment, because right now, decentralized finance, and for those who don't know, decentralized finance being you can borrow against your assets on a crypto platform where there's no intermediary or physical entity other than the digital platform you're borrowing against. And the hurdle there for me as I look forward is simply this. When I look forward into that, I see a moment that says, well, currently right now, decentralized finance is offered as a drop-down feature to exchanges who are responsible for KYC, AML, and all the things to whitelist their customers so they have all the respective information they need to before you have the ability to use DeFi. However, I've talked with Brian Kerr, and shout out to him from Kava Labs and all that they do. But as a developer, they don't even think about regulators. I asked him, I mean, what are regulators saying about your platform? And I'm paraphrasing, but basically, we don't think about it. You know, we make the platform works, and exchanges begin to use it. And that's great too. But I have to say, you know, when I think about this, I think about the idea that at some point, you're going to see DeFi not want to be a drop-down feature, but a standalone product. And that's where regulators are going to have to step in. And then we start talking about the idea of maybe having a node on this network of decentralized platform in order for that to be able to be considered a legitimate, you know, whether it's the SEC node or some kind of regulatory node. Your thoughts, Michelle?
So I think DeFi is doing a lot of cool stuff right now. There are a lot of cool projects. Yeah. It also makes me uncomfortable, having lived through pre-ICO, ICO, and post-ICO, some of the fallout from projects that unfortunately weren't on the up and up. I think it's important for what DeFi is doing. While it's incredibly exciting, someone needs to have oversight, and someone needs to know who's in the sandbox and what's happening. And if something goes sideways, who's accountable and who's culpable. So I think that's where that space should move in order to ensure that consumers' funds are safe.
Absolutely. Karim, I know you said you had some questions.
I do, but actually there's a question from Tony. Tony, do you want to talk about, just unmute and video yourself and ask a question, and then after that, Michelle, I can jump in after that.
Yeah, sure. Thank you. Yes, this question is from Michelle, and I'm wondering if you can chime in as to how does your business model remain relevant as traditional banking are changing the business model to remain relevant in that environment? And how do you compete with them? And if they're not, you know, partnering with business like yours?
Sure. So I actually was talking to someone within the last few weeks. They run a FinTech accelerator, and we were talking about what that looks like. Would Synapse want to be the banking as a service arm for that? And he asked the question of, oh, well, if there's a legacy bank in the room, how would you feel about that? And I said, well, why would you do that to a FinTech if you're the accelerator? And he like bristled for a minute, and I said, okay, if you have a FinTech that wants to get up and running quickly, a bank is going to offer them banking, which is literally just the movement of funds. Maybe they'll offer them a checking account. Maybe they have remote deposit capture. Maybe they'll be able to issue a debit card. Those are all maybes. And with those maybes come months and months of just legal investment. The compliance team on the bank side have to just go through endless iterations of questions and compliance and how does this work and what does this look like, and then the team has to go back, and while they're in all of that rigmarole, there's no guarantee that they're going to come out the other side with what they need. Banks are looking to advance to a certain stage, but they're not in the game as full spectrum as banking as a service or someone like Synapse is, because we offer the KYC, we offer the card issuance, we offer the ability to use machine learning and data to get to know more about your customers. We offer lending products, we offer traditional just bank account. You want a debit card, you want a checking account. So the suite of what we offer is more robust than most banks offer. Most of them don't offer the compliance or customer support side. They offer just the check issuance or the checking account or the debit card. So that's where neobanks will come in and offer more of that. And that's where they're really disruptive and competitive. But again, most of those are using Synapse or competitive platforms because they're not building it all themselves.
Thank you.
Yeah, of course.
All right, thank you, Tony, for that. So Michelle and Brad, first of all, this is amazingly interesting. I didn't know, Michelle, you were the first user of BitTax, and I didn't know your kids played Roblox. We had a Linqto Lunch and Learn event, was it the last week or the week before, that was all about gaming and crypto. So it's amazing that you're using Litecoin in that sort of company, in that context. That's wonderful. I'm going to have a question for you that's related but relevant, and I'll give you a moment to think about it. There are a lot of our visitors here at Linqto Lunch and Learn, and one of the questions we asked them is, why do you show up? And the answer was, we really enjoy learning these things. And given your experience and heritage in being a pioneer and sort of understanding cryptocurrency, using it, understanding what you've done through it, is there an opportunity for you to come back one day for a follow-up session where you can just go through a process of, hey, this is what crypto looks like, this is what you've got to be aware of, and this is how you got to evaluate these things before you make investments in it? I'll give you a moment to think about that before you say yes, because we'll hold you to it.
Yeah, I mean, I definitely, for those who followed me throughout my role at Uphold and before and after, I'm very driven by making sure financial health and understand is important. I think it's important for folks to feel empowered in their decisions, whatever they are, and make informed decisions, not decisions based on what Twitter is saying is pumping right now, or the perceived potential for a gain, because as much as things can go up, they can go down just as quickly.
Okay, wonderful. So we'll hold you to that and create a lunch and learn for you to coach us on that. Brad, I have never heard such a clear definition of DeFi. We're going to be using that and sharing it. That was great.
Well,
I mean, if I ask you to repeat that, will you remember it?
I got it.
Okay.
I got it. I'm great with flashcards too, by the way.
Okay. So just so that you all know, before I ask my question, is Michelle will be one of our presenters at the Global Investor Conference that's coming on December 8th. The other thing is Brad is always welcome, and he asks these very, very interesting questions. So I'm hoping we'll see you there too, Brad, on December 8th and 9th. One of the things that's really interesting to us, I know that the question, first of all, a little bit about Linqto. So we're looking at Synapse now. I know you've raised a bunch of money from Andreessen and Core Innovation Capital. You've done a lot of, your trajectory is good. And just like how we partnered up with Uphold to provide an opportunity to our investors to buy a little bit of Uphold as they continue to grow. As you continue to grow, I'm hoping that you'll give us the opportunity, Michelle, and your management team to allow us to sell some of your product on Linqto for our investors. That would be something that we'd be looking forward to when the time is right. Just so that the rest of you know, we just released today a bunch of new product on Linqto. Kraken's up there, Marqeta is up there, obviously Uphold and Upgrade and Ripple, SoFi, and Linqto shares are all up on our platform. So if you haven't visited recently, go there and take a look. And if it's interesting to you, let us know what your thoughts are. But going back to my question is, so I'm looking at neobanks and I'm looking at how they're starting to use the infrastructure of technology and going digital to provide customers with services that traditional banks have done. And one of the interesting and attractive things that they're doing is using products such as Bitcoin to provide, hey, well, if you've got Bitcoin or if you've got some sort of currency, and I know the focus is on Bitcoin today, we'll provide you an interest on that, leave your assets with us, and the banking will continue as opposed to hey, put some dollars in the account. When we start to look at infrastructures like that neobanks are going through, and as we look at the the economic environment that we're in with the recent COVID environment and a lot of liquidity in markets worldwide, this is a question to both of you. Brad, you'll go first because you have a little bit of less time than Michelle. Then Michelle will go next with, what are your thoughts on how neobanks will use these currency to drive their businesses forward in competition to the traditional size banks?
So will businesses use cryptocurrencies to drive their business forward versus traditional banks? Is that what you're asking?
On a more rapid rate, and what does that mean about traditional fiat currencies?
Well, look, I mean, I'll just speak broadly to that because I can't say that I know the answer, but I would speak broadly to it in the sense that I would say this. I think broadly what we're witnessing, and not just with cryptocurrencies, but in general, is traditionally up until now, we've had a debt-based system. I believe we are moving to an asset-backed system. And that is going to be transformative. And by transformative, I mean, it's not going to change things. It's going to transform it. And it will never be the same again. And this is just the beginning of that wave. And the Synapses of the world and these other platforms and crypto exchanges and speculators and investors, like all the people in here, are a part of making that movement take place. And it really is going to be a point of no return, because I do believe that there is a problem with fiat currency. It isn't worth what people say it is. So, you know, there's going to come a time there where we have a pay the piper moment. And I don't think that moment's very far off domestically in the United States either. So I do believe that we're moving to an asset-backed system versus a debt-backed system. And if you have assets, you're going to be in a much better place than someone that doesn't. That's for sure.
Thank you. Michelle, the question's to you. How do you see this market evolving given the current situation in terms of adapting of cryptocurrencies, maybe Bitcoin specifically, or others?
Sure. So I think an interesting case, if you look back, it feels like a long time ago. If you look back when the first stimulus package was to go out in the US, and I remember thinking, are you kidding me? They're doing this, and they're doing it in checks, or they're doing it to the last bank account that was linked to your tax filing. The people who were set to receive the stimulus and needed it the most are the, you know, unbanked or underbanked, and that their high likelihood of them no longer having the bank account that they had connected to file taxes last year is pretty high. The need for access to a bank to cash the check for the stimulus, they might not have the bank account anymore because they might have lost their job and didn't have money in it, or XYZ reason. So we're sending a paper check to folks during a pandemic saying, take this paper check, go to your bank that might be closed, or go to a payday lender that's predatory and going to charge you 30% plus $50, plus you then owe them this much more, or a check casher where it's the same story. You're going to pay 30% and you have to pay a fee. And by the time you walk away, it's 60% of what the stimulus was. So if you take a step at looking at where things need to be disrupted, if it's fiat and or crypto, there are definitely parts of the legacy finance world. I think the stimulus is one of them. I think taxes is one of them. I think real estate transactions and these larger transactions are one of them, where the dollar for dollar value, as Brad said, we've been printing money at an exponential rate, and we're facing currency debasement. If it's not now, it's when. It's not an if, it's a when scenario. And how you look at that is diversifying your holdings, and diversifying your holdings could be something like Bitcoin or some of the other asset classes that are there, because it's a non-government issued currency. So it's not the US government or outside of the US government saying our currency is now worth X because we're making this decision. That's why a lot of people used to hold gold and still do. So I think there's an evolution there, and I definitely think there will be a move towards diversifying holdings. It's a challenge because if you look at Bitcoin, it goes up and down so much because there's so much speculation and it exists, that until some of that speculation is mitigated, I think it's still a rough hedge for assets.
And I just want to add to that really quickly, Karim. Michelle, you're so spot on. I still have not received my first stimulus check. It is not a joke. 9 million people have not received their first stimulus check,
Yeah.
and I'm one of them. So
thank you, Michelle. That was that was a comprehensive, amazing answer. I think that's beautiful. It makes me want to schedule another Linqto lunch and learn quicker than Wednesday, because I just so much to learn. I know, Brad, you have to go drop off when you need to. Stay as long as you can, though.